Okay, so welcome to the continuation of Power of Two. So you've watched the indicators that really matter, and the three indicators being price earnings, price sales, price book. And I'd like to look at it and inspect it from real life examples. So today is March 24, 2020, and I'm looking at Bloomberg. Of course, the markets are all bleeding from the COVID 19 coronavirus sweeping the world. But let us look at our site here. So I'm looking at Bloomberg, and of course, we're from the Philippines, so we're going to inspect the market in the Philippines and apply our learning of the three indicators that matter. So there's these are just examples of what's happening around the world. Of course, this is centered around U.S. mostly. Let's click the markets on the bottom, and then look for the indices there, at the top. So these are all the indices from all over the world, at least the ones that are being tracked by Bloomberg. So Dow Jones mostly all are red. Well, most of them are red. So except for Argentina and Colombia, the green. Europe is bleeding. Greece down 7.58%. FTSE all shares. United Kingdom down 3.85% yesterday. If this is yesterday, yes. So let's look at Spain. Spain's 3.11, the general index. Nigeria 2.24. Asia is hopeful. Okay, Australia 2.77% up. New Zealand 6% up. Except for India down 12%, 13% Sensex. Jakarta up 3.27. The Philippine Stock Exchange is up 1.41% yesterday. Look at Singapore up 4.02%. So we go to the PSEI. So if you will notice, there are two indices here from the Philippines. The PSEI is the 30 company, 30 shares, 30 stocks index. Um, you can look at it as the cream of the crop in the Philippines, while the Philippine all shares is the broader all shares. So this contains all the stocks that are traded. So this is just a weighted average of how the individual companies have performed through the year. So Philippine Stock Exchange composed of just 30 stocks, but every now and then it's being revised. No, the composition is being revised. So let's look at the overview of the market. Up 59 points yesterday, but remember that just a year ago, it is 38.74%. Baga the movement is 38.74% down from last year. Okay, just in February it's still at 7,500. So imagine the horror of people with stocks are heavily invested in the stock market. So 38.74% 1 year return, so negative. Okay, so and look at the price earnings ratio, 10.09, so very cheap now. So let's look at individual stocks. So click on the stocks at the top, the tab for stocks, and these are the indices, the stocks in the index, the stocks that are trading in the index, the part of the composite index. So these are the most active. Mega World up 6.88%, Metro Pacific up 3.51%. So let's look at individual stocks. So let's see if they are worth buying, and look at some indicators from them. So let's look at let's say Ayala Corporation. Ayala Corporation is the holding company from the Ayala Group, down 53.5% from last year. Look at the PE ratio of Ayala, 4.9 times price earnings. I've never seen Ayala this low. 4.9. My god. It used to, let's look at 5-year data of Ayala if it's available. It used to be at around 1,000. So this is already almost 60% discount. Okay, so maybe you can start accumulating Ayala. If you have millions, try buying Ayala today. So how do you look at the indicators of this individual stock? So you will notice at the top the tabs include, so there's this is the overview, the news, then there's financials. So let's look at financials first. For me, the first thing that I look into, so we are at quarterly view. Let's look at the annual view first. So the first thing that I'd like to see here is the revenue should continue to be, moving up. In this case, if you will look, the revenue is trending up. Okay, the net income, well, it really it's a case to case scenario, but of course we want the net income to be not considerably dropping, but this one seems to be okay, right? Of course, if you will look at the profit margin, it has gone down from 12 something to 11 something. Not really that bad, but the revenue is really what matters. It is accumulating upwards, it is trending upwards, so there's nothing wrong with Ayala Corp in terms of revenue. How about balance sheet? So assets, debt to assets is 34.41. This is another thing that we would like to see. The debt to asset ratio should not be beyond 50% for me. So Ayala is also good. Okay, cash flow, not so much really. Because for me, if you have enough revenues and net income, then usually the cash flow doesn't really look, and it doesn't really put so much you should not put so much emphasis, because these are companies that have a lot of liquidity and a lot of borrowing power if they need cash really. Okay, so as long as again the debt to asset is less than 50%. So key stats, and so Ayala Corp okay with with revenue, okay with net income, okay with profit margin, debt to asset is okay. Look at the price earnings ratio, as we said, 4.94, and at relative PE versus the PSEI or the PComp index is 0.51. What this means is the current rate of PE ratio of Ayala Corp, it is trading just half of the PE ratio of the PSEI. So this part, you should look at it as if it is lower than the PSEI and it is a good company, then it is good to buy. Earnings per share 83 doesn't really figure out that much in our calculation, but relative PE is important. 0.51, good to buy. Market cap, not really important for us. Price to book, look at price to book, 0.82. We said that if a company is trading less than 1, it is a screaming buy. And also the same with price to sales, again less than 1, so screaming buy. So what are you waiting for? You have to buy Ayala Corporation now. Alright, so that's how to look at the analysis of indicators that matter. So let's just look for something else so that we can have another example. So look at stocks again. Let's look at a company that is trending lower. So Manila Electric Company has gone down yesterday. Let's see. 1 year return negative 42.2. Okay, so very low. And also price earnings ratio is 10.6 times market. Okay, maybe the same as the PSEI, right? So let's look at financials first. Is there anything wrong with Meralco? Revenue is that's quarterly view. Revenue is increasing, okay. Profit margin is a bit shaky, but not that not that of a problem because it's just ranging from 7.2, low of 7.2 to 7.5, so there's not much problem there. In terms of debt to asset, 11.55% only, so this is good. That means the debt of Meralco is just 11% of the total asset. So key stats, price earnings ratio is 10.55. The relative PE versus P comp is 1.05, meaning PE ratio of Meralco is a bit higher by 5%, so 1.05, 5% than the PSEI. Um, Price to book is 2.92. Is not so much of a concern. Although if you will see a company trading, very low price to book, and it's a good company, then that's a good company to buy. Price to sales is 0.77. So in terms of revenues, you can count on Manila Electric Company. It's a good company. So for me, between the two that we analyzed, it's still Ayala, better deal. Um, Ayala, but Meralco is not something that you should miss either, right? Because first of all, it's a utility company. People will still need Meralco, even though we have crisis and all that, so Meralco will still stay. And anyway, the liabilities of Meralco is manageable, just 11% 11% of the asset. So I think Meralco is also a good company to buy, right? So between Ayala and Meralco, I would say Ayala by maybe Ayala is about 100 points buy, and Meralco about 85, 87%. So that's it. I hope you learned something from this. Um, See you on the next video.